Let's go. You ready?
Let's do it.
All right. Quiet on set.
Quiet on set.
Quiet on set. Ladies and gentlemen, welcome to another episode of Rein It In. We got an action-packed show today with 5 sticky notes. We're going to cover elections in Alberta. We're going to cover office occupancy. We're going to cover record-breaking immigration. We're going to cover record-breaking taxes on new homes. And we're going to cover rapid-fire global macro. Get ready because Canada is breaking so many records. The question is it good? Is it bad? We're going to find out.
So JG, before we get started, we got to ask, we got people that are subscribing, but they're not liking, they're not commenting. What do we do? How do we politely say, make sure you hit the button. We got to get the algorithms going. It's the word in YouTube world, algorithms.
Let's get the artificial intelligence on our side.
Get the AI on our side. So folks, hit the bell, hit the like, give us a comment, let us know what you love about us, or even if you don't love us, let us know what you don't like. But either way, give us some feedback.
We're going to start, I'm going to depress you right out of the gate, which is I want to talk about the elections in Alberta because Patrick, what's going to happen in Alberta? You have a big election coming up. And I don't think we're supposed to talk about politics, but you and I don't really care so much. So we're going to talk politics. What's going to happen? Make a prediction right here, right now. Tell us your prediction. Tell us what you hope's going to happen. And then tell us what you hope's not going to happen.
Well, I guess at the end of the day, if I had a prediction, it's going to be Danielle Smith. And I think that's the right thing to do. And that's the polls. That's my prediction. But I have some real anxiety around it. I'm anxious about what Albertans are going to do. My concerns is they're going to bring Rachel Notley back into the province as our provincial leader. And Rachel Notley has a very poor track record. She's been there before. She crushed the economy in that province. She was crushing the oil industry. She has a whole agenda that she's not speaking to. And so if we vote back NDP, I'm out. I can't be in that province.
We're selling it all. Alberta's on sale.
Alberta's on sale. Let me know if NDPs, I got some property to sell you in Alberta. I'm out.
Now, for real estate investors that are watching this, elections and politics are supposed to be an influencer in the economic fundamental to the formula. They're not economic fundamentals. Maybe let's speak to that a little bit because if someone's watching, and a lot of people make decisions like you just made, Patrick. And I know you're being funny and you're joking about it in terms of selling it all, but that is how some people make their decisions in real estate is like, if this government gets in, I'm going to do this. If that government gets in, I'm going to do that. When in fact, politics and government are an influencer, not the actual fundamentals, correct? Now they influence the fundamentals. Has a lagging effect, but maybe speak to that a little bit so the real estate investor that's watching this understands how this all comes together.
Well, that's a really great point, by the way, JG. And when you look at the influencer of politics, we can see what, Rachel Notley might do with that NDP government and what their policies might and how it might impact the economy. Having said that, what we know with what's going on in Canada, what's going on in Alberta, and we look at us as rental housing providers, the bigger concern is, will it slow the economy down to a huge degree? Tough to slow that economy down right now, even for Rachel to do that, which is only to say this, is that if the NDP were to get elected, you have to pay very close attention to what their policies are. They may, in fact, for example, come into Alberta with rent controls. Well, that is a game changer. Having said that, rent controls take time to implement. They're not going to happen quickly. And at that point, you may, in fact, make a decision to go, I'm going to change the style of property. I'm going to change my investing strategy. I may not be into a buy and hold scenario. I may then say I'm going to invest in REITs, for example, or limited partnerships where you got a bigger scale of things where you're not in the minutia of having to manage that property. So there's different ways to approach it, but that would be one example of a policy that would affect us as rental housing providers that we would be really kind of aware of, especially in Alberta, seeing what's going on in Ontario and British Columbia, given the challenges that Ontario faces with their LTB.
Now, so landlord tenant board, for those who don't know what LTB stands for, and what Patrick's referring to is Alberta doesn't have rent controls. Ontario and BC do have rent controls. We can get into a debate on that another time, Patrick, but I want to just, I don't want to put you on the spot here, but I think it's important because You made a note about Rachel Notley not, maybe she can't even slow down the Alberta right now, the Alberta economy, because it's going quite well over there. What decisions do you recall? Do you have any recollection of what decisions and what kind of policies were put in place last time she was in that may have affected? Because, like you said, there is a lagging effect to these things, and maybe some of the decisions she made before, have held things back. Any thoughts on that?
Well, of course, she comes in. The NDP government is green. They're very green in terms of their belief systems and what they see happening into the future. So, oil and gas is one of those things that they want to slow down. That is, of course, really kind of said. There's a lot of conversation around that in terms of even what Jagmeet Singh, her boss, kind of talks about. The NDP leader overall. So they talk about the environment, they talk about greening. Oil and gas isn't on that list of things to do. When we look at the labor standards that they want to implement, we know that historically they're very union based and union focused, which is not to say that that's a bad thing, but it also impacts the costs of doing business, and unions have a tendency to slow things down. Now, I don't want to make any of that wrong, but when you're into a province where that isn't the norm and you start implementing that, it does bring things and slows things down dramatically. I can't specifically nail policies, but there's tax implications that they put in place that have an effect on us. For example, you look at what's happening with the carbon tax, where Danielle Smith will actually push back against that. And I just happen to be one of those individuals that don't believe in the carbon tax. But that will, and then, for example, she's not adding that at the gas pumps right now. So she's giving Albertans a break, if you will, in terms of the 14 cents a liter, somewhere in there, of that tax, whereas Rachel Notley would in fact continue to put it in place. So these are all lots of subtle things that are going on in the background. They're not that subtle, actually, but that will actually have a bigger impact on the economy.
Hey, question. This is a total aside, but it's valuable because the carbon tax, they say the federal government, the carbon tax, and by the way, all the other taxes on fuel, which makes up a huge part of what is the price we pay at the pump, is like, I forget how much, Patrick. How much is it? Like 60-70% of what we pay at the pump is taxes, right? Roughly. There's some number. I'd have to ask ChatGPT what the actual number is. He or she. I think I'm going to call ChatGPT a she, by the way. It just feels like a she to me. Anyways, because it's just smarter than me, therefore it must be a she. Okay, I digress. Point is this, is what do you think the government's going to do, dude, when, we start moving more and more and more towards electric vehicles? And this isn't my electrification rant, where, but we know that we're going to have more and more electrification on the road. And as a result, there's going to be less and less government revenue on the carbon tax and all the other taxes that are part of fuel, because electric vehicles are so much more efficient, don't use nearly as much fuel. What do you think the government's going to do, and how are they going to replace that revenue? It's an aside. It's not even on my sticky note bonus round. What are your thoughts on this? How do you think they're going to do it?
I'm going to look at Alberta as just as a province. So government aside, in a bigger picture, talking about Alberta, first and foremost, they still got the cheapest gas in town right now, or in the country, or one of the least expensive. I'm paying $1.75, $1.85 a liter here in British Columbia. I think you said you're about $1.40 in
$1.43, $1.43
in Ontario, right? So you go to Alberta. I don't know. Last time I checked was like 120 or something like that. But the point is, it's always quite a lot cheaper. And then, having said that, they've taken the carbon tax off of that. Now, when one of the issues that we have is an NDP government, BC is an NDP government, so we're feeling the effects of some of their policies and how they tax. Now, that's one part of it. Back to the EV conversation, a lot of people are just talking about cars. When you look into a province like Alberta, which is huge agriculture, so I don't know about you, but there isn't going to be any time soon that they're running tractors and their trucks and plows and agriculture in terms of electric things. That speaks to food. And one of the issues that are on top of what's happening in carbon is that they're cutting back in terms of fertilizer and nitrogen. Well, they're saying not as much nitrogen, not as much fertilizer, which is it's a much bigger conversation into what's happening, but that all plays into energy. And when you talk about EV, that's such a small part of it. When we talk about the cars, we have cars, for example, on the road, such a small part of what the effects of these kind of ESG policies are, which is part of the NDP agenda. So that's kind of, I'm not avoiding your question. I just think that that's secondary, and I see that long term down the road. But what's in our face right now is the ESG policies, which include what they're going to do for fertilizer in a province that's driven by agriculture. A big part of what's driving that economy is agriculture.
Election in Alberta covered. Topic number one complete. Sticky note number two. We're going to talk about office occupancy now, Patrick. What's interesting is a new chart I'm going to put up on the screen here is showing the office occupancy index as of April 15th, which is essentially a couple weeks ago, is 47% of what it was pre-pandemic. That means it's half of what it was, Patrick. And by the way, this is considerably better. This is in Toronto. Okay, just to the one, there's one that's tracked for, there's a different one that's tracked for Vancouver, different statistics. The point is 47%, as low as that is, and it is quite low. Listen, that's half of what it was pre-pandemic. And if I took us back and I rewound the tape to pre-pandemic in call it November 2019, and I said, Patrick, in 3 years, the office occupancy is going to be 47%, less than half of what it is today in 3 years from now, we would all say, oh my God, that's a problem. We have to address this. And as investors, we have to keep an eye on this. Well, that's the reality of what's happening now. 47%. And that's quite good, Patrick, in Toronto, because there's other cities like San Francisco and many others that are much lower than this. So fascinating, because there's a problem brewing that we've actually been pointing out for some time, and this will come home to roost sooner or later.
Well, 100% it will come home to roost. Now, first off, we have to look into the future and say, well, will it get to 60%? Will it get to 75%? Well, we know that it won't go back to what it was pre-pandemic. I mean, just consider this, JG. The government workers alone who are not being mandated to go back yet, and who have, even in conversation, pushed back and said, no, we're not going back. So, of course, what's happening in Toronto, as an example, same thing in Vancouver, by the way, they track it differently in Vancouver. One of the things that they have is a way, I can't remember the company, that tracks cell phone signals. So in other words, they have a lot of data and history of how many cell phones are being used downtown Vancouver, and they've seen it drop by 50%. So as busy as Vancouver feels and seems, it isn't actually, from an office point of view. People are not working. They're not going to work downtown. So there's the gap in Vancouver, similar statistically, or by the data, that Toronto is. Toronto, busy Tuesday, Wednesday is their peak, and Thursday and then Friday, they drop right off, and there is some numbers attached to those dates. The point is this: it isn't going to go back to what it was. Leases are going to be renewing, and this is where businesses are either going to not be renewing their leases at all, or they're going to be reconfiguring, renegotiating, saying, no, I want smaller space. I don't need this much space. So they're going to be cutting costs, and one of the ways that they're going to do it is by cutting back on office space. So when we look at that, it means, number one, what it's going to mean to the banks, and what is it going to mean to the owners of those buildings. Now, most of the buildings are owned by large corporations, large REITs, investment, but that has the ripple effect, which we talked about before, is if that's part of what your retirement fund is invested in, what does that mean to the retirement fund? So all these things, there's a ripple effect that can occur, is likely to occur. I don't think we're going to be like the US, when we'll talk a little bit about bank failures, where 85% of commercial real estate in the US is financed by small banks, independent banks, which is what they are in the US. That's going to be a far bigger problem. Of course, what we don't know is what is the ripple effect here in Canada.
Yeah, and this is a good example, Patrick, where what happens in the U.S. Definitely, you like to say, when the U.S. Catches a cold, or what's your saying? When the U.S. sneezes, Canada catches a cold. You know what you say? Yeah. So, which is always interesting. But if you look at, for example, and I'm going to kind of draw an analogy to the office conversation we're having, but the U.S. and kind of the U.S. Layoffs that have happened, a ton of layoffs have happened in the last 6-8 months in the U.S. We haven't seen that much of that here in Canada. In fact, you and I talked about it a while ago. We couldn't name any big Canadian corporation or any big corporation in Canada that's had massive layoffs like they have in the States. So it's not that just because it happens in the US, it's automatically going to happen in Canada. That's not necessarily the case. And it's the same with office. Our office landscape is quite a bit different here in Canada than it is in the US. But that being said, Patrick, And we've been talking about this for some time, and we want to tell investors to look into the future, because this really isn't going to show up for 1, 2, 3, 5, 10 years is where you're going to start to see this trend. Office, and by the nature of their leases, which are very long leases, 5 years minimum, 10 years most often, and often 15 and 20-year leases, this takes a long time to work its way through the market because of these long-term leases. And over time, we are going to repurpose this space. That's what I think is going to happen, is they're going to be repurposing this space into condos or industrial or other type of space that isn't office related, because it's pretty clear to me that we will not see that type of occupancy go back into office space. The work from home movement, which you and I have been calling out now for like 3 years since the pandemic started, that has taken hold and will continue.
And then I think the thing that I want to watch and I'm going to pay attention to is that right now the downtown core of Toronto still has demand for condos, but I think that there's a consideration that if the demand for working from the downtown core, in other words, office space, isn't going to be occupied, and we see a bunch of condos come online in the coming years, I don't know what's going to happen in terms of demand for those condos. I think it's something that we got to watch. Is the demand going to kind of fluctuate to match the demand of commercial space and workers being downtown? These are all things that we have to correlate and look at and pay attention to. Right now, it seems to be okay. Having said that, more units are coming online in the downtown core, and will there be the demand for them that is anticipated, given a lot of these decisions were made back in 2019, 2018, when things were better, so condos were being built. All of a sudden, they're going to start to come to fruition, and there may be some concern there for those individuals who have invested in that pre-construction. If they weren't really paying attention to the details, that might catch up to some people.
Definitely a tricky time for office investment, office occupancy. Definitely a tricky time, and something for investors to watch out for.
JG,
good shot, eh?
Your sticky notes are right on. Like, wow.
Good. I needed that office break. Now my aim is just flawless.
Well, you're back to the Michael Jordan of sticky notes. Like, good for you.
Next topic, Patrick, and it actually is connected to what we were just talking about, because you brought up a good point, is will this demand, given occupancy, office occupancy, still at half of what it was pre-pandemic, will the demand for condos continue? That's what I just heard your question, and it's a very good question. And I think if I had to answer it today, right here, May 3rd, 2023, if I had to answer it, I would say yes, Patrick. And the reason for that is because of the next sticky note, which is record-breaking immigration. And because single family is so difficult to afford from our perspective, especially here in Ontario, what's happening is people have to go to condos because they can't afford anything else. So as a result, people will continue to flock to condos only because of their price point, not necessarily because their job is close to where they want to buy, close to where they live, but only because they want to buy. They know they need to buy, but there's nowhere else to buy that's affordable. That's why I think that you're not going to see a massive drop in the condo market. It's one possible reason.
Well, I think, yeah, and we have to go beyond buy. I mean, the other side of that coin is in the terms of the rental market. We're knowing that the rental demand continues to grow. We've been talking about that for 3 years as well. You cannot have this kind of immigration coming in to the country and then into the provinces like an Ontario or Vancouver/BC, Toronto, where you have a lot of people coming in and they need a place to live. And so there's enough, I guess, demand to accommodate the supply, at least on the rental side of it, even if the affordability doesn't shift.
Now, speaking of record-breaking immigration, Patrick, right now, last year was a record-breaking year for immigration coming into the country. For those watching who are kind of like,
why are we talking about immigration? Isn't this a real estate show? Don't you guys, aren't you talking about real estate?
Well, immigration feeds real estate really well because the immigrants coming into the country are your clients. They are your renters, and that really drives population, and population is part of the economic fundamentals we look at the Real Estate Investment Network. So just want to connect those dots for people. But last year, in the first quarter of 2022, we had 113,800 people come into the country for the first quarter of 2022. For the first 2 months, Patrick, meaning not the first quarter, just the first 2 months, January, February, we're over 100,000 already. If we keep this pace, we're going to be well over 600,000 people coming into the country. Record breaking is the way to describe this.
Yeah, and they're talking, when you look at permanent residents plus international students plus temporary workers, you're talking about over 1 million people. And, there's lots of discussion about just how responsible the federal government is being in allowing people into this country. As you listen to others or you listen to people who are in the political sphere, and it really is a disconnect. And the disconnect is that right now the focus is bringing people into the country, and the federal government is got a huge disconnect from the provinces and the municipalities in terms of where are you going to put all these people. And of course it's finally starting to show up. I think there's enough conversation being had with the opposition parties to shine a light on it more and more, because it's not just housing. I mean, it's not just housing that is creating a problem. It's creating a problem in terms of just overall infrastructure, and healthcare being one of the prime things that it's causing a problem with. And, I happened to be, this was 3 or 4 months ago, I went for some blood tests, and I went to a local clinic just for them to draw blood, kind of annual checkup. And as I'm sitting there, I had an appointment, but as I'm sitting there, I'm watching people come through into the line. Do you have an appointment? No. Do you have an appointment? No. But obviously, immigrants into the country, like some of them had trouble speaking the language, they're coming in to get checked up. I mean, you could see just the stress within that one clinic and the pressure of people coming in. And it was just an interesting observation, total anecdotal, but having been in that clinic every year over many years of my annual checkups, I see the difference.
Yeah, it's definitely a fascinating kind of time from that part of from that perspective. What I will say is, as rental housing providers, this is what is really shoring up rents. This is really what's driving a lot of demand in our space. I mean, we see it every single day. And Patrick, it's also changing the market. You and I have been talking about this for years. Well, what it does is it actually changes the market around in terms of who's looking for an apartment, who's looking to buy. Those people can't buy, so you end up with a better quality renter, and that kind of pushes the entire market downstream, and that creates affordability issues even more. We'll talk about affordability issues next, because we've uncovered where this affordability problem really starts. We've uncovered where it starts. So we're going to tell you where it starts, this affordability, where it starts and ends, this affordability issue, our amazing government and all their stuff. The point, though, Patrick, is that, just like, and I was telling you this off air earlier, but just like in the last 3 years, throughout COVID, when the market was ripping, I mean, we were seeing 20, 30, 40, 50% jumps in values. And I was saying on camera, go back on YouTube and watch it. I was saying, I don't like this. I want a nice, steady growth in the real estate market. I want 3%. I want 5%. I want 7%. I do not want 30, 40%. Because even though it looks good on paper, you pay for it the year after or 2 years later. At some point, it comes back down. And we've been experiencing that for the last roughly 12 months. Well, I'm a little afraid, Patrick, that this is going to happen from a rental perspective as well, because some of these rents have gone up so much that if the tide turns, and as we get to the other side of the slope, because there's always an up and there's always a down, you're going to have rents come down. And some investors who are not as wise, not as savvy, are going to make bad decisions. They're going to have bad timing. And as a result, they're going to pay the price on the back end of this slope. That's what I'm afraid of a little bit. And, I don't voice concerns very often, but this is something I'm watching closely.
Well, listen, our job is to connect dots. So let's just think this through. So when you look at the immigration, we know we have record-breaking immigration coming in. We don't see that stopping soon. At the end of the day, Canada needs it. Now, here's the thing, is immigration, I'm 100% behind immigration, but we've lost control of it. Now, that's a government thing, and we can debate that all day long. But at the end of this conversation, we come to realize that, number one, immigration is strong. Demand for rental housing remains strong. We do not have the supply to accommodate, nor will we gain the supply to accommodate. Now, that could change and shift slightly depending on what city you might be in. We look at what's happening provincially and or by city, and we can say, okay, well, they might have an oversupply of something as immigration comes into that province or into that city. But ultimately, here's one of the things that we do know, and that is that immigrants coming into a country take at least 2 years before they are in the financial position, have a credit rating, have a job, even know where they want to live. before they start to even consider buying a home. So there is a lag. So to what you're saying, as much as we have some concerns around it, a lot of things have to change. And I'm not suggesting for a minute that it isn't a legitimate concern, but how would immigration have to go? It would have to be almost turned off. Secondly, supply would have
But
to be.
Patrick, that could happen if you look at the numbers in the States. Look what's happening in the States. In the States, they have all but turned off their immigration. I don't have the exact numbers offhand, but if you look at their charts, their immigration is way down, way down. And by the way, that's why some of their unemployment rate is at it's, I think their unemployment rate is like just above 3%. I mean, it's crazy. Big part of that is because they don't have the immigrants coming in the country.
Got it. We don't have that issue. So again, if we're connecting the dots, we, even as it is today, forget the immigration. I mean, that just exacerbates the problem. Forget the immigration. We don't have enough housing supply to supply if everybody just could have something today. So the point is that you have a good, valid point. It's why we look at the economic fundamentals to see the future. Now, if all of a sudden somebody said, we're turning off the tap, we're getting out of this immigration game, and we're gonna scale it down to 200,000 or 300,000 people a year. Okay, well, that seems reasonable. Even if they scaled it back to 200,000 or 300,000, it's not going to have a meaningful impact right away on what we need for supply. So this is a thing that, yes, you make a good point, and I'm not negating it, other than we have time to see these numbers unfold, and we see into the future. So again, to your point, as rental housing providers, that's why we do the research, because we're always looking to connect the dots.
That's the key point right there, Patrick, is that, and that's why we track these numbers, ladies and gentlemen. If you're watching this, if you're part of the Real Estate Investment Network, we report on these numbers every single month. So we see these trends developing. And Patrick, this is something we're tracking very closely. And don't get me wrong, right now it's a boom for people that are in the rental housing business. It's a boom. There's a lot of renters. You don't have to fight for clients. You don't have to, it's fantastic. It may not always be this way, but you can see it coming if you're a sophisticated real estate investor, and it's something you should be watching for. So just keep that in mind. I do want to address a couple stats, but before I do, it sounds like you have something else to say, Patrick.
I just want to add one more thing, which is a huge influencer, and that is from a rental housing provider point of view. For those of you who get the education and take the time to put in the time, understand one thing. So immigration aside, JG, what's happening is OSFI is now maybe saber rattling, but they're already talking about, something in order, politics over policy always. And so they're talking about changing the rules, again, the lending rules, mortgage financing rules for investors. What's that going to do? Well, this is the government shooting themselves in the foot again, which is to say, we need rental housing. Well, let's just take 50% of the rental housing providers, which are the mom and pops that are buying duplexes, triplexes, quads, that kind of stuff, and we're going to make it harder for them. As a matter of fact, we think that we shouldn't even have that. They shouldn't even be buying that much real estate. And you go, you guys, are you like losing your minds? So that's the challenge. So again, when we look at a rental supply, being a rental housing provider, we keep saying it to people, stay in the game, keep moving forward one step at a time. No, it's not easy. Keep grinding away. There's a huge win in it, given where we are going economically, not just nationally, but globally.
Couple of stats I want to share, Patrick, that the research team pulled up, which I thought was fascinating, and it's good for people that understand how important population trends are in real estate. We didn't know this, Patrick, but Quebec, actually, the Quebec government caps the incoming inflow of immigrants to 50,000 newcomers a year, period. So even if Canada brought in 1 million new immigrants, Quebec would only get 50,000. That's the most they take in, which is interesting. We can debate whether that's good, that's bad. The point is there is a cap. They cap how many people come into their province. Fascinating. Now, Ontario takes in the biggest number of these immigrants by far, then BC, then Alberta. What's interesting is Quebec says, I don't want more than 50, whereas the Maritimes are saying, bring me as many as I can get because I need more people, because they understand the Maritimes have an aging population. Many of the provinces do, but at least the Maritimes understand they have this problem and they want the immigration. And to me, Patrick, anyone who's got those progressive policies, I like this as a real estate investor.
Well, we talked about this several shows ago. So many, I think it was a few months ago, we talked about the programs that they have in place to attract immigrants into the East Coast, because they do, in fact, need people, because they have an aging population, full stop. And that's what they have to address. Well, that's what we have to address as a country. And when we look at the quality of immigrants becomes, and I want to say quality, skill set of immigrants coming into the country continues to be problematic. Who are they bringing in? We need trades. We need doctors that are actually doctors, but they've got them driving Ubers. Like, it's so crazy, the whole immigration system, that it's breaking down. They can't handle it. And so this all plays into one of the next conversations that we're going to have, is around housing and solving the housing problem and why it continues to be a problem. So there.
Record-breaking immigration covered. All right, Patrick, next topic on our list, on our sticky notes, is the record-breaking taxes that is imposed by the government, specifically on Ontario housing, that is creating this housing affordability issue. Now, I just want to set the stage for everybody, which is, we got the government, most people in the government, we got a housing affordability problem. Housing affordability, bad investors, bad landlords, bad all these other people. Meanwhile, the people who take the largest share of new construction is taxes, as specifically the federal and the Ontario government get 31% of a build. So if it costs $1 million to build a home in Toronto, $310,000, Patrick, goes to the government.
Where's all your money gone, Daddy? Taxes.
Can you friggin' believe it?
Well, isn't it interesting that it's taken so long for this stat to come out, this information to come out? Well, it hit the Twitter sphere by a storm, and everybody's talking about it. Everybody's infuriated, and so they should be. I mean, this is the most ridiculous thing that one could ever imagine. So that you've got this government talking about it all. 31% of this goes to them, yet they're the ones harping on affordability. And oh, by the way, if you're Jagmeet Singh, you're actually throwing CEOs under the bus. Now, he talks about food, got it, but he's also talking about builders and developers, how greedy CEOs are taking all the money. And the reality of it is, it shows up in these numbers. That's not the case in terms of housing, by the way. 31% is just not even close to being reasonable.
Patrick, I can tell you, as someone who does land development, who does development myself, I can tell you that my margin on new builds is not even close to 31%. So I can tell you that if we put the developers' profit margins up against these taxes, the taxes will win every single time.
It's absolutely ridiculous, isn't it, that you can have the government talking about affordability. You can have the government talking about supply.
This is an outrage. It's the biggest tax increase in history.
You can then say, well, don't worry, we're going to fix the problem. Here's the fundamental reality of it, JG. We talk in other segments about where's rental housing going to go and what's it going to do, because affordability. Listen, we have the government who is the problem.
It's me. Hi, I'm the problem. It's me.
Who is the biggest problem to affordability? And not just taxes, by the way. It's taxes, it's bureaucracy, it's all the hoops that we have to jump through. It's the cost of doing business. It's the cost of the government doing business, just in the bureaucracy that they put in place to manage housing. We're going to talk about that in a minute too. But the point is this, is then we, the people, for some crazy reason, think the government's going to solve the housing problem. So we're waiting around for the government to come up with the answers and the solutions to this housing problem, which is just absolutely ridiculous. The government isn't going to solve the problem because they are the biggest part of the problem. That's all I got.
That's a good one. Here's an interesting graph, and it hasn't always been at 31%, by the way, Patrick. It's risen to 31% in the last couple of years. But if you go back to 2014 and before, it was actually 25% and less. The point is, that's still a lot, but it's gone up significantly from 25 to 31%. And this makes a big difference to housing affordability, Patrick. And I'll give you a couple ways this shows up. If people are asking themselves, how does this show up? Well, I'll give you a real story here in terms of what I deal with every single day. If you look, Patrick, and if you build a new home, let's just say you're a real estate investor, you're going to build a duplex, okay, or a single family home for just to live in, just because you're like, I need a place to live, I'm going to build a new home. You buy a piece of land, you build a home, and just a modest home. I'm not talking about a McMansion. I'm not talking about spending $1 million. you're just going to spend 600 grand on a single family bungalow for you and your family. Well, as you build on a $600,000 home, let me do the math real quick. 13% of that is $78,000 of taxes just on the HST you paid on the materials. That doesn't count everything else. That's just the HST on those materials. And the government says, yes, but we'll give you an HST credit. Okay. So then you fill out all this paperwork, which by the way is confusing to get through. And most people get denied and most people get frustrated and just say, forget it. And they walk away. But the government does offer you an HST credit for a maximum of $25,000. So you paid $78,000 in taxes just on the HST of the materials. They're going to give you a $25,000 credit, so they say. But then there's this little fine print at the bottom that says if your house is worth more than $450,000, you get zero. Patrick, who has a property in Ontario under $450,000? And I'm not talking about Toronto, I'm talking about anywhere. Any property I've ever built is over $450,000 because you can't even get a lumber package for $450, $450,000 these days. So the point is this HST credit that the government says they offer, most people don't end up qualifying. Most people are over the maximum allowed. Therefore, they get nothing.
I don't know what you want me to say that. Like, it's so ridiculous. It's infuriating.
It's where you and I agree 100% on some, but on this we'll agree. I'll tell you that.
We'll agree on this one big time. I think there's we have to look at, what in terms of government. So when we look at solving the housing problem, when we look at what's happening in terms of the cost of housing, the government goes back. We have to look at and connect the dots. This all makes sense, by the way, when you look at, for example, the number of public service jobs that have been hired over the past couple of years. Taxes have to be paid for that. They have to generate revenue. We as a country, by the way, are a debt-driven country. We are not known for being productive. And so that's a whole different conversation. But at the end of the day, our exports, our imports are usually flat. Our manufacturing is flat. There's nothing there saying, okay, let's generate revenue. So if we look at Canada as a country, as a business, we are a money-losing business. So the only way that we can generate revenue is through taxes. So as much as we talk about and listen to, the rhetoric about carbon tax and we're going to get a bunch of that back, or in this case, HST, and you're going to get that back. It's just not the way it is. And so when we look at housing affordability and we're going to fix housing affordability, that's just not the way it's going to be. We are a taxed country. And so here's the problem that we're going to face, JG, when we look at it. I'm going to talk about it at the member meeting next week, which is the fact is that housing, as we've said many times, makes up as much as 20% of our GDP growth. Housing has slowed down for all the reasons that it has slowed down. That, in fact, will have an effect on the economy. So how does this all fold into the picture called taxes? At the end of the day, housing slows down, tax revenue slows down. They have to then say, how else are we going to get it? Because the economy also slows down. So these are kind of connecting all the dots. And although it's just, we're talking about taxes, there's a whole bigger picture that you have to connect the dots to understand what's going on.
It's fascinating. I'll put up on the screen now a chart that shows if a new home in Ontario costs $940 grand, almost $290,000 of it, and they actually show the breakdown in this research, which is kind of cool. They show this breakdown of how much of it's taxes, and we could just pick on one thing, Patrick, just for a second. Is I had some family recently sell a home. They've owned this home for over 50 years, and they sold this home. And they came to me after it was sold and said, "Did you know that the buyer had to pay a tax?" And I was like, "Yeah, it's called land transfer tax." They were blown away. They said, "When you buy a home, you have to pay." They own this home for 50 years, right? They didn't have land transfer tax back then. So they said, "You telling me when someone buys a home, the government takes an immediate slice right off the top called land transfer tax?" I said, "Yep, that's how it works." They couldn't believe it. They were blown away. And a lot of people don't understand this, but man, it's tax on top of tax on top of tax on top of tax. All of this adds up to 31%. And by the way, the research, since this came out, more research has come out that for some big purpose-built rental developments, Patrick, it could be as high as 50+% of it is taxes. Where do you think that goes, ladies and gentlemen? That goes into the rent, and that does not help rental affordability. If they got out of our way, we'd be able to bring rents down. Period. End of story.
End of story. And by the way, on transfer tax, I learned this lesson many years ago. As real estate investors and business owners, sometimes you want to move assets around a little bit. And I was going to move a property into Stephanie, my wife's name. And my lawyer said, well, that's a cool strategy, but she would pay, you would pay transfer tax on that, as that's deemed a sale, by the way. So even within my own, because it was in my name, or in our corporate name, I don't remember. But at the end of the day, that would have been considered a sale. I would have had to pay transfer tax on land transfer tax. So
it's ridiculous. I went through this year, Patrick, and the fact is that taxes are very real. They cost money, and this stuff ends up flowing down to the consumer, ends up flowing down to the renter, ends up flowing down to the client, and this does not help our affordability situation. We're done with this topic.
So to add to what we were talking about tax and what the challenges are with what the government's creating in terms of the costs, and the costs are just not driven by tax, but also the lack of supply, and what gets in the way of supply is more bureaucracy. We've talked about it many times when you look at zoning and all the rest of it. And there was a question here, which is, if you're curious why it takes 3 years in Ontario to get approval for a change of land use. So Ontario's population, about 15 million, and total employees that are responsible for the change of use approval for all of Ontario, 4 people. Yes, 4 people are responsible for that. And it's interesting is that the municipal planners pipe in on that and say they're routinely waiting. The planner, are routinely waiting for 6 months for these development applications to be processed. And in all of that, there are penalties that get paid, and there are certain requirements that need to be met. They got 4 people in all of Ontario handling this. So not only do they have a lot of bureaucracy, it's also a misallocation of bureaucracy. So again, we keep expecting the government to fix the affordability issue, and they just can't fix it because there's a huge cost to all of this. As you know, in the waiting game, that's expensive. So again, that all kind of flows down and gets passed on. So I just wanted to add that to the already griping about what is going on with housing affordability and why it's so darn expensive.
Maybe we should reallocate, Patrick, some of our CRA auditors to become to help in this department.
There you go. There you go.
You could use of funds. Who knows? Good use of people. Oh, are they still on strike, by the way? Is that still happening? We didn't even talk about the strike.
As of right now, it is happening. And, I think what's going to end up happening is the federal, powers that be will look at it and go, okay, folks, what's the ROI? Because don't forget, that's how why they hired as many CRA as they did, because what they're looking at is what each CRA, what the individual.
You just said something. I can't even let this continue. You just said something that makes absolutely no sense, Patrick. You just used the word government and ROI in the same sentence, and there's no way that the government, anyone working in there, is asking themselves about ROI because it's not their damn money.
Well, I got it, but and that's a good point. But they do look at it and say, how can we efficiently and effectively get tax? How can we collect tax? How can we make sure that we're getting all of our tax and it's through CRA? So that is actually an ROI. So we're going to hire more. We're going to spend $1 billion on CRA auditors, and we're going to get a 5 times return on that. So that's actually been published. Those numbers are published. I'm not just making them up. They may be old right now, but that's where they were.
All right, let's get into the final segment on the rapid fire, record breaking, global macro, I told you so section of the show. We're going to start, Patrick, right out of the gate. Calgary has hit a new record breaking list. A benchmark price has just hit $550,800. We don't have a chart on this, but it just happened. It's like hot off the press.
Hot off the press, because there is no chart on it yet, and given it's so early in May. So long story short, JG, we've been talking about Calgary specifically for 3 years. I mean, more than that, but we cranked it up the past 3 years, and certainly driving people to our trusted partners in Calgary to make sure that they're getting deals done. No surprise that we're hitting these kind of numbers.
Next, Patrick, rents have hit a new record. The National Rent Index has accelerated in March. It's now up 10.8% year over year. When the market is going down, rents are going up. We called this one too.
We did. We keep talking about it. It's like every couple of weeks, every month, we're saying, listen, rents have nowhere to go but up. Demand continues. Unemployment is low. Population growth is high. GDP still continues to be positive, although I know we're trending a different direction. At the end of the day, rents have nowhere to go but up, given the fact that supply is not even there. Having said that, when you get into apartment styles, we're starting to see supply increase quite dramatically, as a matter of fact, and we're not seeing that in other property types.
Interesting though, Patrick, I just want a fun fact on this, because if you look at this chart that we have on the screen here of average asking rent, you can see how from 2020 to 2021, it was on its way down. That was because of COVID and because of the great Canadian migration, people moving away from downtown centers into other centers. And as a result, because the urban centers are so densely populated, their rents were coming down. So the rents of condos in Toronto and Vancouver, so on and so forth, were coming down. Therefore, the average rents were coming down. Not all property types, but those were coming down. The point there, Patrick, is some people were saying, oh my gosh, this will never come back. I mean, I'm out of that game altogether. We've seen them come back quite strong, in fact, and rents are now beyond where they were pre-COVID in just about all of those markets. And that's something to be said, Patrick, because people often think in absolutes and they think too short term. What's happening today, is, and they were thinking that during COVID, is it'll never come back. It did come back, and now they're back on a tear in all markets across Canada.
Well, and I think that we have to add on here, JG, and I don't know the impact of it, it's just anecdotal anyways, but just think about how many regions have and or are shutting down short-term rentals. So when you look at that whole short-term rental game and the movement of people around it, that also has an impact. So I think that we're destined for higher rents, and I don't think there's going to be anything stopping that. I don't think it's going to be dramatic, and they will go through plateaus and level out. But ultimately, there's a lot of causes to that, not the least of which is, of course, supply or lack thereof.
Rapid fire number 3. I'm pretty sure you wrote this headline, Patrick, because it says, West looks best. And of course, that would be Mr. Alberta himself writing those show notes, I have no doubt. But we have a great chart here, Patrick, about the economic growth. 22 economic growth in line with expectations. Saskatchewan, Alberta, Manitoba, BC, all ahead of Ontario, albeit Ontario looks a little ahead of BC there, Patrick, according to this chart.
Well, you know something, I look at what's going on with this, and, as much as this is rapid fire, and you did add to that the point that we get to say we were right, which is sometimes nice to do, given how many calls I've made that were they were right, but they were wrong in terms of timing, and some wrong calls for sure. But when you start to see that this is in fact what we've been talking about, and it is coming to fruition, the economic fundamentals don't kind of lie. They tell you where things are going into the future. And that's why we keep talking about this stuff. And hopefully investors are actually not bored with it and going, blah, blah, blah. No, this matters. This is why if you were investing in Calgary 3 years ago, 2 years ago, a year ago, as an example, you would have been doing very well.
All right, Patrick, for our next rapid fire, we have the third official U.S. Bank collapse, which is First Republic has now conceded. It's JP Morgan, I believe, has purchased all of its deposits, which you could speak to. But that's number 3 now in the U.S. Silicon Valley Bank, Signature, and now First Republic. Albeit this wasn't much of a surprise, Patrick, because I think from pretty much the get-go, they thought that First Republic was going to go down. It's just now official.
Well, we knew it was going down because Jim Cramer said it was the perfect time to buy into First Republic. So we know that it was going away. Here's the concerning part of this. There's lots of concerns about all of this, by the way. And that is that just these 3 banks alone have surpassed what the cost was of banks shutting down in 2008. And by the way, the number I got was 147 banks shut down through the 2008-09 financial crisis. And keep in mind that a lot of these are quite small banks with, only a few billion assets on their balance sheets. But the point is that We've now exceeded that with just 3 banks. They are very concerned about what they're referred to as contagion, by the way. And this goes back to what we talked a little bit about what's happening in the commercial lending space, where 85% of commercial lenders in the US are these small banks. So it seems like the smaller banks are going away if you're listening to the narrative of what's going on in the US. And of course, a JP Morgan just got bigger. They got handed a sweetheart deal with the support of the Fed, with the support of the government, and they took over First Republic and over that balance sheet. But they got the pot sweetened in a couple of different ways. So it's all to say the bigger banks, or the too big to fail banks, continue to get bigger, and the small banks seem to be going away. That's a US thing. What we don't know is what is the downfall, or the fallout, if you will, I guess is a better way to say it, of what that means to us in Canada. The thing that we do have to keep in mind is that Canadian banks do have money globally kind of out there. And so that could be a bit of a blowback, a little bit of a ripple effect with what's happening in Canada banking system. Not a big concern, other than Mr. Trudeau recently did a little bit of risk mitigation and put some policies in place in the banking system, which is to say, if things go south, there can't be a run on the bank. So that was a new thing, and that just happened. And so prudent, but we never had that before.
Interesting. Rapid fire number 4 is some stats came out for Toronto, the Toronto market. I think this is quite indicative of many markets across the country, Patrick, which is sales are down, new listings are way down. Like sales are down by 5%, 5.2%. New listings are down by 38.3%. I mean, we had a supply issue, Patrick, last year. Remember? I mean, we had a supply issue in 2020, 2021, 2022. We kept saying we need more supply. We need more new listings. We had an issue then. They're down 38.3%, which is a lot. Active listings are down 20.8%. The average price is down 7.8%. That, by the way, is not everywhere. This is just specifically Toronto numbers. And then the average listing days on market is up 54%, and the average projected days on market is up 71%, meaning we're projecting it's going to get a little bit worse from the days on market perspective. So that's the stats for Toronto, and kind of indicative of many markets across the country.
It's pretty much indicative of every market across the country to some level. The point is that there just isn't listings. I think every realtor in the country, every brokerage in the country is waiting for spring to spring, and it hasn't sprung, and we don't have a big barrage or a big a large number of listings coming to market. And it's interesting about that, nobody really is everybody's trying to figure out the psychology about it. Why the psychology of people not listing? Why are they not selling? And then of course they say, well, because there's nowhere to buy. Okay, got it. But that is self-fulfilling prophecy in terms of, okay, I won't sell until somebody else sells so that I have something to buy. I don't know the psychology of it, to be honest with you. We just see it, and everybody's waiting around for supply to all of a sudden start to surge. At some point, we think it will. Most think it will. We just don't know what's going to open up that door.
Yeah, well, waiting and is certainly interesting, Patrick, because we see a lot of real estate investors on the sidelines, hoping, praying, and waiting, which are 3 tactics and strategies we don't think work ever. So just be careful about that. If you're hoping, waiting, or praying just for real estate, that's very just find a better tactic.
We need a better strategy.
Next on the rapid fire, Patrick, is Canadians' indebtedness returns to historically high levels. This chart just shows that essentially we are back to 180%, albeit, pre-COVID, it was about there. If you look at this chart, it's kind of like this has pretty much been our average since mid 2015, according to me. There's a huge drop because of COVID, but this just feels like clickbait to me. RBC Economics, bad on you. Clickbait.
Yeah, I don't think it doesn't even have to be considered. It doesn't even have to be considered clickbait, JG. At the end of the day, what we know, and I keep going back to, here's the concern with all economies, and that is that we're debt driven. And this is a concern not just for Canada. So when we start to see people reach this level of debt and we consider the interest rates, what we start to see is that at certain levels of income, in that lower income tier, we are seeing people spend less. They're actually not putting their hand in their jeans and buying stuff. Starting to see parts of retail slow down. At the other end of that scale, when you look at collector items and collector cars and exotic cars, those markets are still off the charts. People are spending a lot of money in those higher incomes. They continue to build their asset base, if you will, and spend money on collector things, including collector cars. So all to say that the debt level continues to go up. That's part of what drives this country's economy. So if it starts to slow down, there's where we see some risk to the economy.
All right. That completes our rapid fire questions for today. My aim is spectacular. This show was spectacular. Thanks for watching Rated In. Please like, subscribe, comment. We'll see you on the next episode.
We need a Post-it note sponsor.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click there.